All right, good afternoon, everybody. Welcome to SVB here in Boston. We're super excited to have you guys here for our September fundraising workshop. This is going to be a really exciting, action-packed, hyper, attentive type of workshop that we're really hopeful that you guys get a lot out of it. We're going to jam a lot into the next 55 or so minutes. And we're going to save time at the end for some Q&A. So as things go by, please make sure to take some notes and things like that we can call out and draw attention to at the end of the day. Want to also welcome our friends that are tuning in online. Welcome, everybody. We're super excited to have you. My name is Maitland-Lewis. I'm a director of startup banking and founder success here at SVB. I was a former founder for over 20 years, YC alum, sold a couple companies, failed at many others, maybe failed forward is what I'd like to say, retired musician and everything else. And I'm honored to be here at SVB. I was a client of SVB's for close to a decade. And so it's a really comfortable, awesome place for me to be able to lean in deeply with our companies and help them succeed and carry on through all the tranches of startuphood. And in startup banking specifically, it's usually from the EIN formation through the Series A inflection point. And then we also then have our growth team and our commercial teams. We have our investor coverage teams, our private wealth teams. It's a whole 360 holistic approach to founder success here. So today, I am humbled and honored to have our guest of honor here today, Alex Finkelstein, who's the co-founder and general partner of Spark Capital. Now, he's a legend in the VC space, and I'm excited to dive deep into that. We're not going to go too deep into his story because I really want to keep it tactical and fundraising, but honored that he's here giving us his time today. Spark is a massive, hyper-successful organization that he co-founded, 12 billion under management, over 300 investments. Like I said, the guy's a legend, and we're honored to have him here today. So without further ado, let's get this kicked off, and let's welcome Mr. Alex Finkelstein.
Far from a legend, just hustling like everybody else.
Yep, always be hustling. Well, welcome, sir. Thank you again for being here. Before we get too deep into all of the programming, the questions that we have, I'd love for you to give us a broad overview of Spark.
Sure. We started the firm exactly 20 years ago. So 20 years ago, September, is when we started the firm in Boston. There were 4 of us from the start. 2 of us are still at the firm, 2 have retired. So we started the firm. Our first fund was $260 million fund. From the very start, kind of no politics, no bureaucracy, all about kind of founders and kind of product. Everything was kind of product. We started the firm actually, this was right before smartphones, right before social networking. We saw broadband penetration rate. So 20 years ago, the firm was very much focused on media, entertainment, technology. We thought that was all about to change. We were fortunate to be, we backed Twitter when it was an 8-person company. We were the first investor in Oculus, Wayfair, many other companies. Very quickly, we started seeing similar trends happening in fintech. So we were early investors in, Plaid, when it was a 2-person company, Flywire, which is a local company. We backed when it was a 1-person, really student project, and many other companies. We then kind of, saw the consumerization of the enterprise. I think being, consumer investors and then kind of seeing what was happening in the enterprise 15 years ago led us into areas like that. So early investors in companies like Slack, for example. And then we raised a growth fund. Our growth fund for us is different than a lot of other growth funds. So it's not an overage fund where we're just picking off the best investments from our early stage fund. It's the opposite of that. It's investing in kind of B and C rounds of companies we're not in for whatever reason. So we started a growth fund. We've since raised 5 growth funds. And then, fast forward to today, we have offices in Boston, New York, San Francisco. We've got $9 billion under management. We invest in everything from still consumer to fintech to we've done hardware investments. Fortunately, we were very early into AI, starting in AI investments well over 10 years ago. Investing in everything. We're the first investor in Anthropic from the venture standpoint. One of my partners was the former head of product at OpenAI that he joined when it was just really a research lab. So, and backing companies like Cruise, the self-driving car software company, which is really an AI ML company, 10, 12 years ago, to Light Matter, a really Boston MIT story. So really kind of doing stuff like that 10 years ago to now. We're very small by design, so the whole firm is 25 people. Most firms with our AUM have now 200-300 people. So our whole firm, including operations, assistants, is 25 people. The investing team in the early stage is 6 people. On the growth side, it's 8 people. So we're doing all the work. So it's not like we're a firm where it's It's a pyramid. Someone sources a deal, another person does diligence, they bring it to a senior partner. Then we kind of then the senior partner makes a decision. That's not how we operate. I did 3 investments over the summer, actually co-founded a company that we're backing, as well as made 2 new A-round investments. Like I did 100% of the work myself. And that's really the way we structured the firm. So we're kind of small and nimble, means we have to pick our spots as well. Yeah, that's a very quick overview of Spark.
No, that's really fascinating. I didn't realize that you guys kind of had such a boutique approach with such a large impact.
Yeah.
And that you co-founded a company over the summer too.
Yeah, that's Spark's backing actually.
Congratulations. You want to tell us about that company real quick?
What their company's doing is under wraps actually. We're
Okay.
kind of in pre-sale, but I've done that 2 other times as well.
That's
Where I've
awesome.
kind of had an idea, brought a team together, co-founded something, we funded that, and that's worked out well both times. So hopefully the 3rd time works out as well.
Yeah, I'm sure it will. Congratulations.
Thank
It's going to be an exciting new adventure. All right, diving into it then. Thank you again for being here. So from your seat, how has the fundraising landscape shifted over the past couple of years, and specifically for seed to Series A rounds? And where do you see it going?
I mean, so if you've raised a seed and you want to raise a Series A?
Yeah.
I think companies like things that are doing well, like the rounds are happening incredibly quickly. So I just met with somebody this morning. It's like, oh, I heard it's a terrible fundraising environment. We don't see that at all. We think actually like now, I think we've always been busy. I mean, I think we have 10 signed term sheets right now within the firm, and that's a pace that we've been at for many years. So I think companies that have interesting teams, doesn't mean that team has some of those people that we back are 19-year-olds that are still in college. So it doesn't mean you have to be 45 years old and have this great track record, but very interesting teams that are starting to get traction. I mean, the 2 A rounds I did over the summer, so it's probably the best way to look at it. I mean, that went from first meeting. I mean, I had some theses, but that went from first meeting to a signed term sheet in under 2 weeks.
Wow, you guys move really quick.
Yeah, but I don't know if that's just, I mean, I think if we see something we like,
Yep.
We, clear the decks and do our work and spend a lot of time with founders and sometimes a very short amount of time. But it's not like a drawn out months process for things that we think are interesting.
That's nice and refreshing to hear.
Yeah.
So, when you're evaluating those companies, like what are the 3 to 5 things that really stand out to you that you evaluate at that point?
Yeah, I mean, if you're in a Spark partner meeting, especially for the stages we're talking about, all we're really talking about is product and people. Like, we're not really talking about revenue. All we're talking about is product. Like the company, one of the last deals I did, I did a bunch of work on it. Founder had a great PowerPoint, came in for a full partner meeting. PowerPoint never went up. All we did for that hour and a half was talk through the product, where the product's at now, why the founder created that product, the founder vision, us all using the product before that company came in. So we are very much kind of product people investors. Obviously, we want to see traction happening.
Right.
That's interesting, but it's less, I get asked often like, what are your revenue milestones you need to see to do an A round? Like, that's never a conversation we have. Some of our best deals have had no revenue, some have had a lot of revenue, but that's never kind of how we start a conversation.
What if, flipping that switch, what if it's their first round and they're going for a seed or a pre-seed? Let's just say seed.
Yeah. I mean, it's not that different of a conversation.
No.
It's not like a seed. Honestly, the bar to get a seed done and get for $1 million seed investment and a $30 million Series A, the conversation, the decision-making, exactly the same within Spark.
Wow.
It's not like it's $1 million, let's take a flyer on this, seems kind of interesting. We'll debate that deal for hours, sometimes days, just as much as we would a $25 million investment. Just kind of, we have to either have conviction or we're passing. And we have to, we're going to spend probably more time in the $1 million investment than the $25 million investment, if I'm being honest.
Yeah.
Just helping set up that company. So those things matter as well. The last thing we ever talk about is kind of valuation and things like that.
The last thing.
The last thing.
Okay.
If we ever have a conversation that starts in valuation, we're like, we should pass. Because that is not the lens we think through. Like, do we love the founder? Do we love the product? Do we love the vision? We care about that. If we're talking about like, oh, this is a good deal, we should do it because we own a lot, like we're like, we should pass on this investment. So that's literally the last thing we ever talk about is kind of valuation, raise amount, things like that. That's kind of the end. If the conversation starts there, we should just move on.
Wow. So kind of digging into that a little bit further. So let's say we were to introduce you to a founder, you're about to have an introductory call. It might not be in person.
Nope.
It's a pretty big split for you. I'm sure you meet
Yeah,
founders
whatever.
virtually,
Both.
right?
Yeah.
How do you like to run that first meeting? Is it founders spits up a deck and walks you through it, or do you just start with like an open conversation?
Yeah, usually an open conversation of, their background. Like I said, like we're back people that are undergrads in college. Some of our best deals, someone never even went to college. They were 19, dropped out of high school. Really kind of like understanding them, why they started the company, why they're building the product, why they want to bring this to life. Like really, really understanding that. That's how we really want to start the conversation.
Love that. Love that. Arthur Rock once said famously that it doesn't take a lot of ink to write a check. And, how should founders evaluate whether a VC specifically is the right fit for a long-term partnership with them?
Yeah, I mean, like I said, it's kind of crazy. Like we're spending sometimes a week or two with someone that we sometimes never met before, especially at the seed and A round. Sometimes we've known them for 20 years, but often we've never met them before. And we're about to hand you like, here's $5 million. I literally just met you in a week. I mean, so how should they evaluate us?
Yeah.
We spend a lot of time. I mean, it's literally sometimes, all right. There's a deal I was looking at in Zurich, Switzerland last year, and I kind of spent a bunch of time with them. Deal heated up. And I was in New York and DC for a week. And the week after I knew I was in SF for the whole week. And literally like flew home from New York, grabbed my passport, just my family, and then went to Zurich, where the company was headquartered. It was just like two guys that were out of college. And we spent the whole weekend together. I mean, we really got to know each other. It wasn't just like we talked business, we talked product, we talked life. We got to know each other very well in 48 hours.
Right.
And it's really things like that. I think the most important thing, if I was a founder, I would talk to other founders. I mean, so Spark, we have no marketing department. We don't have an internal marketing person. We don't have an external marketing person. We don't have anybody retained, maybe to a fault. Like we have none of that. And all we really care about is like, what do our partners think of each other? What do our founders think of us? Like if we can get a company that we're serious about to talk to our founders, I think we're like in a good spot. And like, that's where we want to be. So that's kind of how we think. We should probably do like a little more maybe from a marketing standpoint. But we literally really don't do it. Really, we don't do anything.
Yeah. I will say Heather was great. She was awesome.
Yeah.
She made everything happen.
Yeah.
So you guys really roll up your sleeves when you get involved with these founders and you really dig in. You don't just write a check and take off. You help them with the strategy, with the go-to-market.
A seed I did recently in the financial services space. I personally, I told them I think the hardest thing about this company, they actually didn't have any customers. I had a thesis for like 3 years, exactly what they were doing. So I was proactively looking for like exactly this company. I was spending time with other founders, like should we start something in this space? That wasn't happening because it's like a very specific area. And I found two people in Chicago that were like they were building the product, exactly what I was looking for, like to a T.
Wow.
But they had no customers. I was like, I think the hardest part of this history of this company, their customers are publicly traded companies. Mm-hmm. So taking a risk for a publicly traded company for like mission critical software, it can't fail. I was like, I think that's gonna be the hardest part of this company. But I personally went out there and got them their first customer, publicly traded company. And so it's really that type of work where, getting their first customers, helping them with that. I spent a ton of time in recruiting. I mean, I spent my whole morning, I was, recruiting VP candidates for two of my companies. I had 6 interviews this morning, both people I know in my network, and then half of them were more serious interviews. The other half were like, I'm trying to sell these people to come to this company. It's crazy that they're leaving this amazing company to join this tiny little startup. So often before that, I'm talking to the CEO. I'm like, are we in sales mode? Are we doing 75% interview and 25% sales or vice versa? So we're spending a ton of time on that. It's a lot of, a company, like Boston company, Videa Health in the dental AI space. I mean, I spent a lot of my weekends, early days, like that founder, the amazing founder, closing like company making deals right after the A round. He was super busy. So we spent a lot of our Sunday mornings from like 6:30 to 8:30, like really going through like strategically, it's like company making deals. As a company matures though, actually, I don't think if you're spending a ton of time with the founder, I actually think things probably aren't working perfectly. Because I think, the founder, honestly, the founder should have actually, things are working. We recruit an executive team around that founder. They're out with customers, they're building product. If they still have, if they're still working with you like every day on things, I think that's actually a bad sign. Because like they honestly shouldn't have the time for you as things really, really, really get going. Then you're working with them on bigger things. I need you to go recruit this crazy executive. I need you to fly across the country and like take this person and close this person for dinner. I'm thinking of buying a company and I want to buy the company. I need you to play wingman with me to tell me why I shouldn't buy the company. I need a lot of your time for the next 3 weeks. I'm thinking of going public. I've never been through the IPO process. before I need you to like work with me through that process. So then there's like bigger, meatier things. I've come here and should we, like, I hope we don't sell, we have a great acquisition offer on the table. But it's a tremendous amount of money for the founder, even though we just raised an A round. And that's a lot. I mean, we are talking like every day about that right now, and thinking through that process. So I think these things change as a company evolves.
No, that makes a lot of sense, but it's nice to hear how involved you are.
Yeah, and we want to be the
evolves
first.
Over time.
We pride ourselves in being like the first call, good times and bad times. I mean, there's a public company in Boston where, I backed out as a one-person student project. And at one point, the company had 3 weeks of cash left. There's another VC in it. They totally abandoned the company. They stopped returning the CEOs, phone calls, emails, like this thing's a zero. I was the person at the office literally for like 3 weeks straight, to like 2 a.m. with the CEO and the VP. And we had to, lay a third of the company out. We were literally buying ourselves days to try to get to the other side of things, which we were able to do. But the other VC was like, this is a zero. I think like not returning a CEO's call that you backed is like the worst thing you could ever do in the business. That's the way we work on a daily basis. And that's why we're like, if we're competing for a deal, we're like, just talk to the people we work with. Like, that's when we think of like marketing. We just are like, it's not marketing. We're just like, talk to the people we've worked with. They're going to tell you what we're really like in like great times and bad times. And like, I think if we're like competing for a deal, if we get a CEO to that level, I think we feel like we're in a good place.
That's great. All right, I'm going to flip gears a little bit here and kind of go back to what you mentioned a second ago, where valuation should be like the last thing that we talk about in a conversation. Yeah, it's one of the first things that founders, especially in the early stage, are trying to figure out. Yeah, which is their valuation. How do we look at valuation? How do we set a valuation? Specifically in today's environment, we saw valuations go super high and then come back down to reality. So as earlier stage companies are thinking about their valuation and they're going to talk to you, should they kind of just keep it in the back pocket and not lead with, hey, we're raising around and we're trying to raise this much on this much?
I would never say with the valuation raise. Not from a competitive standpoint. It's kind of like, if I see a VC say that, it kind of feels like an amateur move, to tell you the truth. If they say like, I want to raise at X valuation, I'm kind of like, that's just like that's kind of a turn off. It's more like, let's figure out if like we're a fit for you. This product's awesome. You're awesome. Those other things will sort itself out. We wonder how much they're raising. And then I think those pieces of the puzzle are like come together. And that's like, I don't think it's a big mystery. It has to be like enough ownership for us where if it really works out, it could be a fund returner, if not more. We want the founder to own a ton of the company. Like, we want them, like, this is their life's mission. Like, their life is about bringing this company to the world. We want them to own a lot. Like they should own a lot. They're going to be spending like majority of their life building this company. So we have no problem. It's not like we're trying to get every last pound of flesh. So I think those things kind of work itself out. And like, you have a pretty good sense if you're doing this every day of like, you can see a company like, oh, I'm raising a $15 million. I just met with a friend of mine's company. It's not a fit for us, but he's like, company's going out to raise an A, can you meet with them? And I met with them. And I was like, guys, I think it's like an $8 million A round. I don't think it's a 15 to 20 million. You just kind of have a feel for these things of like, if you're in the market every day, meeting with tons of companies.
I mean, I will stop to acknowledge the fact that you just said that we want founders to own a bunch of equity in the company. That's really cool to hear. I think usually founders have this perspective of, I'm going VC, I'm going to lose all my ownership and yada, yada, yada. But it's important for me to own 10% of a really massive company versus 60% of a much smaller company. So it's just nice to hear your thoughts around that.
Yeah, it's not something like a lot of the founders I back have become like super close personal, not business friends, but like our families go on vacations together. Like we've been through like the wars together. We're like super close personal friends, not even like business stuff. Like our wives have become great friends. Like you go through these like life journeys together. Like there's these huge ups and downs. A lot of our companies that are public companies had crazy things that happened to them that were not great at times. I have 2 companies that are ready to go public in the online travel space. Those companies were getting ready to go public right before COVID, and then like their revenue literally went to zero. Like these are companies that are, they have billions of dollars in revenue, and then their stuff goes to zero. Like those 6 weeks when COVID hit are like crazy. So it's like you just go through so many hard lifetimes with these people. But it's not like, we don't want to be a majority control investor. We want to be a minority investor. We don't need to control a board. We're not looking for those things. And like, if you look at a term sheet, I think only like 3 or 4 things on a term sheet actually, honestly. But I think it's like I have 2 lawyers I do like everything with. And like, I don't even spend, if I get a term sheet, like the only things that really like, how much you're raising, what's the valuation, what's the option pool, what's the board going to be? And, I think founder vesting is one where like I get both sides of it. Like, like founder vesting is on one side, if you're a founder, you're like, why do I invest in? I just like started this company. 100% of my shares should be invested. I get that. On the other hand, like I'm about to write you a check for $10 million. If you leave in 3 weeks, I'm screwed and you still keep all your equity. That's not fair. So like, I honestly start that conversation, literally what I'm saying, like I get both sides of it. Let's figure out like what's fair and go from there. Outside of that, everything is like boilerplate down the middle. And if it's like, if things are really bad when those things matter, some of those deal points, but if things are really bad, like it doesn't really matter anyways, if I'm being honest. Like we're not a firm where it's like we're trying to get 5 cents on the dollar if things go bad. And if things go bad and things will, we'll sell a company for less than we invested, like we're not gonna like, the founder put a lot into it. We'll do a carve out for them. We want them to like, so we're not, I think if you have a VC who's trying to like eke out every dollar on a, they're gonna, if they're on a bet on something where you're gonna sell it for a fraction of your invested capital, like move on to like, you're gonna make your money in doing like things that are huge. So like a lot of those terms at the end of the day are like, I think pretty boilerplate and obviously get a really good lawyer, but I wouldn't get super hung up on a lot of those terms.
So just to double back on that a little bit, let's say we were to have a conversation or so, I should be able to articulate how much I'm looking to raise for what and why, and how that's going to get me to the milestone, but not necessarily on what valuation.
Correct. I usually think, if you're raising a seed round or even an A round, like how much can you get to, I think of like 24 months, maybe 18 months, but like, all right, this money should last you 18, ideally 24 months. Then let's like get clarity on like what milestones you can hit in that time frame. If you hit those milestones, you do really well, an A round should happen easily. And kind of thinking like that. I mean, that's kind of, it sounds, it's really like conversations and thinking through those milestones.
Yeah.
Is really, so how much money are you raising to get that done? If things go really well, you're gonna be able to raise that money well shorter of 24 months. I mean, if you have a company that's really doing well out of the gate, I mean, we have a lot of companies in the last year that raised a B, C, and a D round all in the same year, or an A and a B round all in the same year.
Wow.
They didn't necessarily need the money, but the company's growing so quickly, valuation that people were kind of coming to that were very fair, and those things, was de-risking to from a standpoint. Sometimes companies have too much money, then they raise, then they hire too many people too early, so there's pitfalls of raising too much money early as well.
I'm observing that it's a pretty noisy space right now. There's a lot of action going on all across the board, across multiple sectors, with the democratization of coding, with vibe coding and everything else. Everybody's standing up companies, which is on one hand really exciting. On the other hand, I'm wondering if that's making your job any harder to kind of dig through all of the activity that's going on in the market. And then a second to that, a follow-up to that would be, what advice do you have for companies that are trying to stand out above the noise in the space?
Yeah. I mean, I think it's always been, I'm trying to think if it's any different. I mean, I think it's not like we see more deal flow now than, there's a lot of companies getting started, but it's not different than other times. I mean, I think of like our weekly, the number, we track it kind of annually, but probably not as well as we should, but it's not like, we've always been really busy looking at a ton of companies. It's, we were just looking at, when the NASDAQ, just talking with my partners, like when the NASDAQ was like super low a number of years ago, like that portfolio, I think it's going to be great. And maybe a lot of people weren't doing deals. A lot of companies were getting started and we were seeing a ton of deals. Obviously with AI, everyone's starting an AI company today, but like, it's hard. I think that's just a hard part of our job when you're especially looking at a seed or an A. Like we have a growth fund there. It's more clear of like, this looks like it's going to be the breakout company. There's real metrics around it. That's why it all comes down to like the product and people conversations we have. Because there's not like, you can't say like, just revenue because it's growing really quickly. Let's do the A round. That's usually past the A round often. So it's really, it really does come back to like product and people. If you were at a Spark partner meeting, let's say that like the company's sitting, like you're the CEO, like we're sitting around the company. Like I said earlier, like often what happens is like we've all like used or been so deep in the product before the company comes in. And like that, sometimes two of my partners in front of the CEO are debating the founder's product in front of him or her for like 10 minutes, like with passion, excuse me. And we actually decided like 2 years ago, like, we have to stop doing that. We're like, we got to let the founder do the meeting. And then we like did a little survey of our founders and we got the exact opposite. They're like, that's so different than other partner meetings. Like every other partner meeting is like, here's the PowerPoint, 2 or 3 people know like what this company actually does. You're in and out of the meeting. And there was like, you guys were so into like my product I was building. Like that was actually why I wanted to go with you. Yeah. Even though like one of your partners was disagreeing with my vision, one was agreeing, like that's kind of how we like, that's how we like what our partner meeting is like if the founder's there or not there. So I don't know if I fully answered your question, but like, our job is to like, see a ton of deals. You want to be seeing deal flow. You can get, pretty quickly you can understand, you can get a sense of like, is this worth my time or not? That's just kind of like muscle you build. Doesn't, for a number of reasons. So yeah, you do need to like pick your spots. Like we have I have a number of sub theses I'm working on at all time of like areas that I think are going to be super, super interesting. And like, so you're kind of coming in with a prepared mind. So when you see it, you can kind of like really, really jump on that. At the same time, you need to keep your eyes open a little bit because sometimes there's things not out of your thesis. And we all have, there's 6 partners in the venture team, all these sub theses, some of which overlap with each other. That's a lot of areas you're covering.
Sure.
So there may be a lot of noise in the market, but like when you see something, you kind of have a good sense of like, I should spend my time on this. Doesn't mean I should do the deal, but this is worth real cycles.
Mm-hmm. Mm-hmm.
And if it's like, there may be something in that space, but you're meeting with a founder and you're like, this is not a founder I want to back. Like being able to figure those things out quickly is important.
Yeah, 100%. Back, let's just say pre-COVID, mainly specifically like when I was out raising between 2015 and 19, we were at a stage where it felt like it was growth at all costs. Right?
Yeah.
I was turned down by a bunch of VCs because we weren't burning fast enough.
Yeah.
Which to me just kind of felt
wrong.
I
hate that.
Whatever. I hated it too. But it ended up working out. And I'm wondering now, kind of where we're at now, where we've kind of come back to reality of building, an actual company with a defensible mode and everything else. Like, what are the triggers that are true now versus in that growth at all costs period when you're looking at a company? Is it the team dynamics, the defensible mode? Is it the IP? Is it their go-to-market strategy?
As a company kind of matures to the B round, or
no, still very early stage here.
So the question is
specifically,
yeah.
in the current climate, what are the investable triggers that you look for now versus a few years ago when it was growth at all costs?
Yeah, I think growth at all costs was bad. I think it's things that, are you like, I'm actually looking for triggers of like, I just backed a seed entrepreneur, the people they're bringing me to interview, like some of the interviews I did this morning, I was like, I can't believe this founder like got this person to say, I think I want to work at this company. Like that's a trigger. Like, wow, this founder has it. Like they are somehow getting this amazing executive who's at the prime of their career, who's making, $1 million or $2 million in this amazing company, who's going to come back and make $100,000 because like, they're going to they absolutely like have to join this company. That's an interesting trigger.
Mm-hmm.
I think from a product standpoint, we're always looking at, moats and data. And those are super interesting things for us. I spend a lot of time on really aggregating proprietary data and what you do with that proprietary data. So like, those are things that I think are interesting. I say revenue doesn't matter, but getting those early, we spend a lot of time helping companies get customers. And that's some of the best validation you could do. For example, like I was the first investor in Wayfair, for example.
Right.
And I have a company that's like, one of their ideal companies is Wayfair as a customer. And, I called the CEO of Wayfair. I was like, hey, I'd love to bring this company in to meet with you. So it's me, the founder of this tiny little startup company who's never, it's a big meeting for them. And like me and the CEO of Wayfair. And like, they were like, lean in. And all of a sudden the CTO of Wayfair is in the meeting. And like, okay, this is like, that's an interesting trigger just from like but it comes back to product at the end of the day. And I also, I'm a very product focused investor, but I also like CEOs that can sell as well.
Yeah.
So it's a combination of like, honestly, like everything you said, but growth does matter, just to be clear. I don't want to be like, make it sound like, revenue doesn't matter. We're just sitting around, you're building a great product. There's a point early where it's like, it does matter. And not just revenue, but like really getting the customer traction. Like company I just did, I told them like, I actually don't care about your revenue for the first 2 years. But I do care about like, are you closing your ideal customers? Are you like growing internally? Because like we can figure out like if they love your product that much, like we'll figure out pricing in 2 years. Like, so I'm not worried about like the exact revenue you're going to hit for the next 2 years. But there are companies where you should be growing quickly. Like LTV and CAC makes sense. Like, yeah, we should be like, if the math makes sense, we should be spending money on that. That's not growth at all costs. That's just like what you should be doing if the math makes sense.
Yeah, 100%. Usually that's why they come to you as well, is throw rocket fuel on something that they've already validated.
Yes.
Wayfair, you've got just what I need. All right, so let's flip a little bit here again, okay? So given your background as a screenwriter, which I'm really excited about, which we won't dive into today, but he was a successful screenwriter for a whole bunch of awesome studios. When a founder is pitching you and the industry in general, I'm wondering how much weight that you place on like the storyline that they tell versus the data and the traction that they present.
I think it should be both. Like, we spent a bunch of time on like, can that founder really cleanly articulate the story? I think it does matter to us because it also like it's gonna
how you recruit.
It's how you recruit, huge. It's how you motivate a team. It's how is this person gonna be able to raise their next round of capital? So how do you get customer? I mean, it's how, like if that person can cleanly tell that story in a very articulate way, it's gonna help you like get those initial customers. So I think the storytelling part, it's not just like we had found it the other day and I was like, turn this off. Because he told us this huge sob, honestly, kind of like a long sob story of like, but it was like so over the top. It was like, I feel like someone coached him on
The
storytelling where it was like too much storytelling and it felt like it was manufactured. And actually was actually like, this company came in Monday and it was a turnout for us. As opposed to telling like, really give like the genuine story, the real story. But to be able to do that in a very clean, articulate, concise way is like, so that is important to us.
You know, it's funny. I don't watch a lot of TV in general, especially like a lot of these like reality shows or competition shows or whatever they are. But my wife will, and I'll like jump in and check it out and see what's going on. And usually these like songwriter shows or whatever they are, they always start with this massive like sob story of their backgrounds and you know, to sort of validate why they're there. And I sometimes wonder, like, is that really relevant? Is that what we should have focused on? Or should we be focused on like why I'm here and where I'm going and like, you know, the conviction piece versus that, you know, I got my heart broken when I was 13 and ever since then I've wanted to be like a, you know, singer-songwriter.
But so it doesn't mean you have to be like big and sales. I think of some of like our best deals ever. Very soft-spoken founders, like quieter people. That was like I think of like Dario at Anthropic. It wasn't like he was like coming in and like owning the room. It was like very understated. I think of like the founders of Twitter. I still remember like they pitched us in Boston for it was like an 8-person company. Like it was like they were like quieter, understated people, but they were able to really articulate like why they started the company, why the company is where it is now, and what the product's going to be in the future. Like so, it doesn't have to be like over the top sales. It's just like really genuine, if you will.
And so that's really what sticks with you when you're meeting a founder and you're telling, you know, and you're seeing how they articulate their vision and where they're going and how cleanly they do it. And that really sticks with you and how they do that.
And like why I think of like some founders I backed, they were undergrads at Harvard at the time. Company that's had many, like the company's now really doing great. Called Mark 43, which is a company in law enforcement software. And I backed it was 3 undergrads at college. And you would think like selling to the government, the last place, like so hard to do, the last people you would ever back would be like people in college. You have no idea how to sell into the government. They had a professor who was ex-Navy SEAL. And they had a project with the Springfield, Massachusetts Police Department. And they went in the Springfield Police Department and they're like, this can't be how a modern police department works. So they just started building records management 911 system. They weren't even starting a company. They just started, which I loved. They were just like, we're going to build an amazing product for Springfield, Massachusetts.
Yeah.
And they just started doing it in their free time. And like, that's how like they started, they're like, this is, and they had family members who are in law enforcement and first responders. And they just started building the product. And I met with them. It turns out I thought it was like, it wasn't even a company at the time. It was just a product. And I play hockey with like a bunch of cops. And I called a buddy from, I have a friend who is, at the time he was head of undercover narcotics for like Back Bay and South End. And I would never used to take a phone out in the first meeting, but Scott Crouch, who was like 19 at the time, just telling this is what we love. Like he had no revenue, but he was just building the product because he saw what was like going on and he was just doing it. He wasn't asking for permission. He wasn't even trying to sell. He was just building the best product for the customer. And then like I had a cop come, it's actually a good Boston story. I had a cop, I was this guy down, I play hockey with him. I'm like, hey man, anybody can pop into this meeting? I don't even know. And he's like, he's an undercover cop, like literally comes to the first meeting halfway through, like puts his gun on the table, puts his thing on the table. I wouldn't normally pick up my phone, but I didn't even know he was actually, in Back Bay. I was thinking like, can we meet you the next week? He literally comes halfway through the first meeting, because the meeting's going well. And you know, the next day, he's like, you guys want to come into Boston PD? The next day, I'll show you how we work. And then that was really the heart of my diligence. Springfield, Mass, Boston PD. The next day, we go in, and it was like green screen technology. Everything that Scott, this 19-year-old entrepreneur, was articulating to me, I was seeing firsthand at Boston PD. And that's kind of like the realness, the genuine, like
Yeah.
Scott was starting this company because he saw that problem, even though he wasn't a cop, and was just building it. He wasn't asking for permission. He was just doing it with his two other founders. A cool side story. So like 2.5 years later, Scott picks my sister. He's like, I'm gonna have a car pick up Alex. I just need her for like an hour. So I go down, get in the car with Scott. I'm like, I don't know where are we going. He's like, just chill, man. We start driving through Boston. And we go into, all of a sudden we're at Boston PD. I haven't been here in 2.5 years since you were in college. And we walk through Boston PD, we go into Boston PD, and we go into kind of this auditorium kind of room like this, and the police chief is like announcing to all his lieutenants, we are going live on Mark 43 software.
Wow.
Which was pretty cool. Like he was in college, I brought him into Boston PD, and then 2.5 years later, he brings me in and they become a customer, which was cool. Sorry, little aside, but like that's just a real story. Like that's a seed investment. Like that's what we're looking for. Like it's not like crazy over the top salesmanship. It's like genuine product. He gets in front of a customer. He knows how to like articulate it, even though he was 19. Like no background in any of this. Like that's what we like.
Yeah. Grit,
genuine, and just doing it.
Not asking for permission, making it happen.
Yeah.
What was his team makeup at the time? Was it just him making it happen?
Him and two classmates.
Yeah. So engineers at the time are kind of just coding away, doing it, figuring
building
it out.
the product.
Mm-hmm.
They just spent hours and hours and hours. They went to Springfield and a few other police departments and just said, I'm gonna spend like hundreds of hours of everyone at this I'm gonna spend time with the chief. I'm gonna spend time with the cop who just got the job a week ago and everyone in between, and just seeing how do they work on a daily basis.
Yep.
That's what they did in their free time in college.
Wow. Sounds fun.
Yeah. I did a ride along with them in a crazy area.
Tell us that story.
No, he's like, if I close, our first customer ever was the Washington DC Police Department, which was crazy. I thought it would be like the Newton Police Department.
Yeah.
And,
Springfield.
and I'm like, if you got this, he's like, you're doing a ride along, and so we did it. One of the hardest areas in the country, outside in DC. So yeah, we did it. I was in a car. He was in a car. 12 p.m. To 6 a.m. It was usually one of the craziest things. We saw hardcore, really, really crazy.
Yeah, I can imagine. And they're still a success story today.
Yeah, but that's an interesting, like they've had they started off really hot and then kind of like we're figuring some things out and now couldn't be doing better. So, but it was like super hot. Then like we closed what we thought was like the best customer in the world, massive contract, hundreds of millions of dollars contract. And we realized like partially the way through that, like that company just they want us to build custom software. We don't want to build custom software. So we had to walk out of that. Honestly, kind of delayed the company 2 months.
Yep.
And now we're like, are totally out of that. And we have closing, some of the biggest police departments, not in the US, not just in the US, but also the world. So, but that's been a journey. I mean, that one's like a great example of like, it's never a straight line.
Yeah, never is. So that's a really good example of, these kids just going after it, making it happen, finding a problem, coding it, making things just work without, sitting back, doing a market landscape and the whole thing. Out of all of the years that you've been investing in teams, like specifically, founders first, but teams, like, is there a sort of a common theme, as you're looking at a team that it just stands out to you that this is a strong team? They either complement each other or, like what are those things that you look at and you're like, wow, that's a really strong team?
Yeah, that's kind of what I'm describing. I mean, it is like that, just like that product first, obsessing over the end user. It's like you meet these people, like I was that person once, like if you don't bring this to the world, like your life is literally not going to be complete. But that's how you're going to like go to the ends of the world to like get a customer, recruit that person, like all those things. Like you're obsessed in an insane way. And that could be, like I said, that can be like a very vocal person, it can be a quieter person. We're looking, you meet with thousands of companies a year, like a few times a year, you see that, it. We're not always right. We're early stage investors. We're far from always right. But like, that's what we're looking at. And like all my partners are different. Like we designed our partnership. So like we all look at things a little differently.
Yeah.
And we like that. So we bring a company in for a full partner meeting, like everyone has a bit of a different lens that they can critique. And sometimes you have like a brother and sister's keeper, which is great. And then sometimes you're like, hey, I know you don't like this. And, sometimes some of my deals are like, I had to convince my partners, like literally like pounding the table sometimes over weeks to get something through.
Yeah.
It's really those types of things.
That makes sense.
But it's tough to, sometimes we're wrong. Like, with such conviction, But like the majority of seed companies don't work out. So then you're like, huh, like I had such conviction, but I was wrong. So it's like an interesting business.
You ever passed on a founder that maybe just kind of, maybe you reviewing a deck or something like that of a company, or you're kind of digging into it and you just sort of underestimated the founder and then they ended up proving you wrong?
Probably. I have to think.
I don't think too hard. Just
No, no.
I was just wondering.
There's a company I'm thinking of, it's like a very well-known Boston company where I was like the first person ever to see it, and it was like,
Yeah.
it was just like that, one of the founders, one of the person I thought was the CEO wasn't the CEO, I'm like, you should be the CEO. So I actually didn't do the deal, introduced it to some friends of mine, it's a company with tens of billions of dollars, but like, kind of had a, like,
Yeah.
even though we passed, I was like, come to my office tomorrow, like, we're gonna redo your PowerPoint, redo your story, you're the CEO, the other guy's not the CEO, I'm gonna call two of my friends, who I think should do your seed round, and that's how that round happened.
Wow.
And so, yeah, it's like one of the flagship Boston companies now. But that's great, like all those people are close friends of mine.
Yeah.
And like, they needed to get like, the story wasn't right. Like, the person pitching was not the CEO. I was like, wait, what's going on here? So, sometimes you like reset things and, help people out. Like that's part of what we do.
Yeah. Do you look at first-time founders differently than repeat founders?
The data for us is interesting. We actually, if we look at like our best deals, usually, not always, but us backing someone we backed a second time is actually not our best. You think that would be like our best cohort of founders? Because they've done it, they've had success. It's actually not. And we know them so well, we were the ones that backed them. Surprisingly, it's actually not our best cohort.
Interesting.
Yeah, you think it would be the exact opposite.
Yeah, maybe they're just not as hungry. It's like when you're in a band, right?
Yeah.
The earlier records are always nice and aggressive and like exciting, and then they
Unreal.
make it, and all of a sudden they're like, doing just low key stuff. They've lost the edge.
Yeah.
Maybe that's the case.
Yeah,
Maybe
but then there's always exceptions. I mean, look at, but then there's like, the Wayfair founders, that was not their first company. But you say that's far from an absolute.
Yeah,
because like we have
a lot of nuance.
Yeah, there's a lot of nuance.
Yeah.
But it's interesting. We looked at that data.
That's cool. Look at the data. That was a question that was just off the cuff. I got a lot of them, but I'm trying to keep it moving over here and organized. And I keep looking at my watch because I want to make sure that we have time for Q&A, and we're right on time.
All right.
So we got 15 minutes left. We are going to open it up right now for Q&A. My man Dennis up here in the front's been also monitoring the online. So let's start with one here in the room, and then we'll move to the online, and then back and forth. We'll ping pong it for a little bit. Anybody want to go first? Boom, right here. Mark in the front row.
Hello, thank you for being here.
Sure.
So you mentioned you can quickly see if the founder or someone in the team you might want to invest in. I'm curious, like what it is that you're looking for in that quickly see kind of conversation. Is it what they say? Is it how they present themselves? What might it be? And then my last thing I'll say.
And I may be different than my partners.
Yeah, of course.
I'm attracted to whatever type of partner someone is, and some of my founder than. But it's what I'm kind of feel like I'm being a little dramatic, but it's literally what I'm talking about is like, they're like building a product in an area that we like have conviction in. They're building something. So even if it's like an amazing founder and just a PowerPoint, that's actually a pass for us. We want someone that's like just building something, even if it's raw, it's not perfect, and it's really like. We just go so deep on like product vision, like those conversations. And sometimes it's like, I think of some of the deals I've done, we're like, you know what, we're close on this. I'm gonna bring them in for one more, let's do like a dinner, I'll grab one of my partners, we're like, I need to get one more thoughts on this. Like, let's really go deep in that. So it's not the, hey, revenue, sometimes there's founders that are very like, it's like an arbitrage revenue play, and I'm gonna get to $100 million really quickly, but like we're not talking about product, like that's a pass for us. So it's really like I'm being repetitive. Like if you're in our partner meeting, like literally it's like 80+ what we're talking about is like people, product, how they talked about the product, how they think about the product. We like people that disagree with us too. We don't want people that are just like, like we're very happy if we're debating in front of a founder and the CEO's like, no, I don't agree with you at all. Here's what I think. That to us is like, oh, okay, this person's got some, like we like that.
Yeah.
Awesome. And if you ever need a goalie, let me know.
All right, I like it.
Yeah, we got a couple hockey players here. Dennis, he runs he manages all the East Coast relationship managers from the tech side, and he just came down from Canada to make it happen. Yeah, and he found a hockey crew also to hang out with. So, yeah, you guys should all get together. I'll just come be a cheerleader. I'm better at that. Another question here in the audience? Vlad?
Yeah, so to kind of go on top of that more, how has your like selection of deals in the AI era kind of changed, or how has it shifted because of like, it's so easy to build a project and now it's so easy to get to like revenue? Is it like, how do you guys like select, or how has like your expectations shifted because of that?
Yeah, I mean, I spend a lot of time, I'm kind of more like at the application layer. So I spent a lot of time, what I call it, they're kind of data information services companies. So marrying proprietary data, semi-proprietary data with very, very messy public company data. So I'm looking at like these very often, so I'm doing a company in like the utility space. I have a company in debt capital markets. I have a company in the pharma space, all in kind of AI.
Do they have to have like a large market size, or is it like niche apps? You know what I mean? Because it's really easy to build like niche apps nowadays.
Yeah, these are less, I mean, these are more kind of, they would historically look more like vertical SaaS companies or more data companies. I mean, I personally have historically done a lot of companies that like, at first it's a very unsexy industry. It looks very niche. The more you dig in, it's actually massive. That's kind of like what I have really spent a lot of my career doing. So, and then sometimes if you like collect it, like I do a lot of, what looks like workflow software, come in with modern, software, AI software, all of a sudden all the, you're changing everyone's life on a daily basis that's using the software, all the data feeds in, and there's all these things you can build on top of the data, then you've truly built a platform company. Those are very, very interesting things for us right now. So,
Yeah, that answers.
I mean, we debate, I mean, it's interesting. There's gonna be, there's categories we look at there. You can argue like there's 10 companies, sometimes 20 companies. It's a category where there's gonna be huge winners. There's really no barriers to entry. Barrier to entry may be like who can raise the most capital, which is not really a barrier to entry, but like that founder can do it. Those things we struggle with on the at the seed and the A. Like that's why we have a growth fund, honestly, because we're like this category is great. There's going to be 1 to 3, $5 to $20 billion companies. They all kind of look the same. Here's the 8 best teams, but there's no barriers to entry. They're really none of them are different, but there's going to be 1 or 2 big winners here. We struggle with that some other VCs don't. They're like, yeah, there's 5 good teams. We're going to pick one of them. Let's roll. We debate that and struggle with that. Maybe to our own fault, honestly, because we feel like we're seeing all the right companies, but like we struggle with which one it's maybe going to be. And that's why we have a growth fund saying, hey, this space is interesting. Here's the 5 best teams. We're going to pass on this A round, but we're going to introduce you to the 5 best teams. And then once the 1 or 2 starts emerging as a real category leader, right before that, that's where our growth fund should invest. But that's a debate we have all the time to struggle with.
Let's do one from online.
Sure. So the flurry coming in here. One is for you, what's more important, really strong tech or a really big painful problem being solved? So at the earliest stage.
Yeah, I mean, what the combination of both? People are always like, is the founder or is the market? I'm like, I don't know, good founders like gravitate towards interesting markets. So, I mean, if it was, say both parts of it again?
Yeah, it was really strong tech or a really painful big problem being solved.
I mean, if it's a really great problem being solved, like the product we didn't believe in, the founder didn't believe in, that'd be a pass for us.
Yeah.
And we're passing on something like that today. We just debated it this morning and we're like, you know what, the space is interesting. We just didn't see with the founder and but we're going native in that space. And I think we were already looking at the space. So that's why we found the founder, but it's only gonna make us dig deeper. So it was just like a really big problem. The founder and the product weren't good. I mean, that's a great pass.
You want one more?
Take one more. This one's a general one. So advice for a first-time founder who's starting the fundraising process. What advice would you give them as they're thinking about starting their fundraising campaign?
I feel I'd have your ducks in order. So I wouldn't just, even though I'm saying the company I brought in that we never looked at the PowerPoint, I actually helped them on building a killer PowerPoint. You know what I mean? But that helped them understand their story. I think one reason we didn't need the PowerPoint is the founder and I, it helped him really understand his story better where he didn't need it. So I'd say you want to get your ducks in a row, but if I would say spend time fundraising or spend time just building a great product, I'd spend time building a great product.
Well, what did you
Easy
actually
to say, but
I know it is easy to say, but there's
Still
life and
fun.
everything else that's going on and everything, you got, it's like the money to get the customers, we get the customers to get the money. It's a whole thing. What'd you do to make that deck awesome? Like, what was it missing before? Like, what was like the pixie dust that you sprinkled over it to make it awesome?
What was the company I co-founded? So the one I'm thinking about, I was like, okay, I got my own team. Like, I'm not going to talk during this meeting. I'm just going to let the CEO, like he's got to be able to like convince you guys. I'm not,
Yeah.
I'm already bought in. I've spent the whole summer putting this thing together. So it's really, we spent a lot of the summer like really defining, like it was a somewhat broad idea, like bringing it together to be really defining what it is, and saying no to a lot of things. So it was kind of a lot of that type of stuff.
And then as you sat back quietly.
Tough for me.
I was about to say, that's
Totally.
very difficult for me too. I'm like, as you sat back and he articulated everything to the partners, were you
Killed it.
Killed it?
I was
Nailed
like, killed it.
it? That's
I
awesome.
was like, intros went to like the whole
Bam.
yeah, we went from like intros to like just telling the entire story in like one fell swoop, and
Wow.
debating my partners in a good way too, like not always agreeing with them. Like that's good too.
And you were quiet during that period too?
Yeah, it was actually pretty good for me.
Nice job. Wow, I should take a lesson from you. I can never do that.
Hey, question for Alex. So I'm a first time fundraising. I'm a fourth time founder, but raising funds for the first time. And what I've discovered in the last few months or weeks is I encounter a lot of people who are like industry expert, and the conversation starts very nicely. So it looks like they are going to invest, and then it turns out, hey, I have like a $300 an hour rate, and I take like 2 to 5% of fundraised, and I will introduce you to like 50
take note of those
people.
people.
So when you see founders like who come through these connections, what's your reaction like?
We would never even take the first meeting.
Uh-huh.
Yeah, that's like you're being scammed.
Yeah.
Seriously, I would never ever. It's like those people are they can't get jobs. They're probably not really industry experts. I'd spend zero time with those people.
Yeah.
Like absolutely, I wouldn't even like. Yeah, that's like we wouldn't even take a first meeting. We probably wouldn't even read like an email. Not sound arrogant, but like that's like, yeah, I would stay far away. I'd stay far away from those people.
How have founders gotten through to you?
Everywhere. I mean, first of all, I will still cold call anyone. I mean, I do a bunch of work myself. I mean, one of the last deals I've done 2 years ago, I cold walked into someone's office.
I like that.
So I will still do that if something's interesting.
So can I cold walk into your office?
But I would kind of like appreciate it if someone,
I know what you mean.
if they're it's a real thing. It's not gonna like scare someone. I just like walked into their office and they're like, what are you, like the assistant's like, who are you? What are you doing?
Yeah.
But it's everything. I think it's everything. It's like I was just teaching a class at Harvard Business School last week, and like, what's deal sourcing? It's not one thing. It's everything.
Yep.
All the way we deal, like everything. We just sit back. Hey, we got a good brand. Things are coming our way. It's everything. I mean, the vast majority comes to like a network we built over the last 20 years.
Right.
It's why we hire people. So like I think of like the last 3 people we hire, they have complementary deal flow sources. So Fraser was head of product at OpenAI, and he was a founder before that, sold the company to Airbnb in the AI space, and joined OpenAI when it was just a research project. That's like a super interesting network he has. Another person we hired recently went to Stanford, joined Robinhood when it was a 15-person company. Took a ton of risk, he became VP of engineering and product at Robinhood at a very young age, was managing more engineers than anyone, started a company, sold that to one of our companies. He's a very, very, not just the companies he's worked at, which is thousands of people, but then he kind of came up with this cohort of thousands of people in San Francisco. So like, we're looking for people that have these like interesting complementary networks than we have. But we also, like, even though we're hiring these people, like, we'll all still like, we're doing this deep sub-thesis work and like, don't know this entrepreneur, like, we're gonna find a way to meet that entrepreneur if it's interesting. Whether it's cold walking in someone's office.
Pick up a phone,
Yeah, so
you can pick
it's
up the phone
and
call
if you're a
somebody.
good founder, like, you should be able to get to somebody. It's like, if you're a good founder, you should be able to like, if you're gonna be able to sell,
Yeah,
you should be able
job.
to get to somebody. And it's like, hey, you should be able to, someone wants to get a meeting with me, like, they should be able to figure out like 2 to 3 degrees of separation, like, and get that meeting. Like, that's a sign for me of like, is an interesting founder. If it's more of a consumer company, it's like, wow, there's like, getting traction and we're often like trying to reach out to them. So it's really like all of the above. It's not just like, it was just one thing.
One question on this side, we'll have one more question on this side.
Yeah, so when you were talking before, it seemed like the most important thing, at least early stage, a little bit more than revenue, is the product and the customer interaction. You gave
And the team.
Yeah, and of course the team. You gave a B2B example for that. I was just wondering how that differs and looks different when it's B2C and what you kind of look for there.
Yeah, I mean, if I think of some of our B2C investments, we're often like users of the products. I think of some of our, like we have a B2B hardware, a B2C hardware company called Remarkable. I don't know if any of you guys use Remarkable, but like, I mean, we all started using that product and loved the product. That person wasn't even fundraising. They're in Oslo, Norway. And we called them and we said, hey, can we come visit you? They're like, I'm not fundraising. Actually, I've never raised an A round. I'm profitable. I don't need any money. Like, can we come to Oslo and take you out to dinner? And because we like loved the product, we were able to like look at some third-party things, like, oh, this is growing actually really quickly with not a lot of marketing. So it's kind of those types of things where it's often like, even if it's a rough product, it's like growing quickly, no marketing. People are like finding that love, and we love the product as well. Looking for kind of the combination of those things.
Gotcha.
But it's hard. I mean, we started our whole firm. All we were doing is consumer. Consumers, it's trickier. It is. Like B2B is somewhat quantifiable. It's a bit of a different animal.
Mm-hmm. Marketing spend's higher too than with B2B, right?
Absolutely.
Yeah. So it's just, do you evaluate it differently that way too, where it's like it's going to cost a lot more? There's going to be more of a churn. It's a little bit more volatile of a market versus B2B, where once you're locked in, let's say the police departments and everything else, you're pretty much locked in unless something happens.
Yeah.
But you evaluate both kind of however you're feeling it.
Yeah.
Yeah, I like that.
Thank you. When you're looking at companies, and looking at their moat, how do you value patents in your equations?
We look at it. It's not where the conversation starts, honestly. And we have some companies we like chip level, AI chip companies, for example, where, we do spend time there. I think of Oculus, which we were the first, we were invested in Oculus. There was like a lawsuit after the company was acquired about patents and things like that. So we would never start a conversation of, wow, you have amazing patents.
Right. But do you value it? I guess is the point.
Value in terms of valuation of the company?
However you want to answer it.
I would say it's part of the conversation. It's never been like a lead part of the conversation. Especially if it's an A round, it's like I filed for these patents. But I'd say I feel like it's almost part of diligence, less part of we're making the decision because they have this patent. It's not. I can't think of a time recently where like that's been the lead of our discussion around patents. I can't even think of the last time.
Thank you.
Doesn't mean they can be very valuable as you get going, especially for like a hardware company, for example. So I think over time, we have companies where like, hey, we got to hire a patent lawyer as you get going. But it's never been kind of the day one part of the conversation.
Any last words of inspiration before we shuffle you out of here on the helipad so you can keep going doing deals?
No, I mean, just get it done. I mean, just build the product, get it out there, and like learn. I mean, I think like the worst thing you can do is like pontificate forever and like think about it, like just get it out there. You're gonna learn more from whether it's consumer, whether it's B2B, than you are if you're holed up for years. And I don't want anyone to steal this or think about that. Just like get it out there, and like you're gonna learn more from that than anything else.
Rock and roll. Well,
Thanks for SVB. They've been great partners since we started Spark, and very close friends of ours. So, huge fans, and you guys have just been just great to us through all the years.
Thanks. That's really nice to hear. Appreciate it. And I look forward to hanging out with you then soon.
Yes.
You're the man. Thank you.
Thank you.